Right, okay, sorry guys, just a bit of a technical thing there for me. So it looks like we've got people in the room, so let's get started. Welcome guys to this nailing FX and crypto session. Let me just get rid of that timer and put the disclaimers up there on the top left hand side. Please do read them. Of course, it's always a good thing to read these disclaimers and know what you're letting yourselves in for. Essentially, just to summarize them, is that we do these sessions, we explain how we look at the markets, how we do things, we demonstrate our technology, but ultimately, of course, it is up to you to decide what you do with your trading. Okay, cool. So what we're going to do is we will go through some new opportunities. Those of you that are in the room, if you have any questions, by all means, please put them in the chat box. If you want me to look at a particular market as well, we can look at that if you put it in the chat box, particular timeframes, things like that. You guide me as to what it is that you want to see most. Otherwise, I'll of course just look for new opportunities that we can put on. I see Ray's just joined us. Hi, Ray. And by the way, guys, hope you all had a lovely Christmas and you're eating loads and drinking loads in this time between Christmas and New Year, as is the point, and that you have a great New Year as well. So let me bring up just this link here very quickly. It's tradewithufos.com/Becky. If you're watching this for the first time, this is where you can go and get some of the apps, most of which are free, apps or platforms that we use. If you're interested in those, you can book one-on-one coaching if you want. And there's also this area where you can log in for free and ask questions, which other people can then see the questions and the answers. Okay, so what I'm going to do to look for new opportunities, I'm going to come to TradeStation. Now I'm using a scan in TradeStation. What we're looking at on the left-hand side, we are looking at, these are US dollar pairs, so majors, and on the right-hand side, we have minors, so we have the cross pairs. What we're looking at in either case is we are looking at where we have essentially decent opportunities, not to mean that we will trade them, we may not, but it's worth looking at basically. So what we're looking at is basically yellow boxes that say sensible. You'll notice some of them say hopeful, some of them say sensible. We want the yellow boxes that say sensible, and we want to make sure that they have a colored box in this section. So that's what we're looking for, and then we'll look at them one by one. I'll start with the bigger time frames because I tend to think Forex is better done on the bigger time frames. Not to say it can't be done on smaller ones, it's just harder in my opinion. So we'll start with the bigger time frames and then move down to the lower ones. So starting with daily time frames. Again, happy to be led by you guys in terms of which particular time frames you want to be using. Okay, so we will start with a cross pair, or a major, just because most people will trade it. So this is the US dollar Swiss franc. So it's a near sensible short, and we have this red box here that tells us we've got probability to the downside. Hi there, Ray. Just seen your message there. So hi, nice to see you. And Anise as well. Hello. Okay, so we'll look at the US dollar Swiss franc on that's a US dollar Swiss franc. And we will look at that on a daily chart on the left, which means we will be looking at just going to get rid of these previous things. There you go. We'll look at a 55-minute chart on the right. Now, if you can't see a 55-minute chart, maybe you're using MetaTrader 4 or something like that, or 5, then no worries. You can just put a 60-minute. It doesn't need to be 55. We use 55. It gives us slightly better probabilities, and not in every case, but it doesn't make too much of a difference. Okay, so we are looking for a thick red dot. That's what we see there on this AutoClimate app. AutoClimate's a free app. On most platforms you can get it on. The red dot is telling us that probability is downwards. That's why we use this app, because it tells us where probability is. If probability is downwards, it makes more sense that we sell. So that's what we have here. We have probability to the downside, therefore we should be looking to sell. Now, saying that, we don't just click sell, because if you just click sell or you just click buy in the middle of nowhere, the likelihood of it working out for you is less. You also can't really manage your risk as well, and your reward is again undefined. So yes, we have probability to the downside, and yes, we want to sell, but we want to know where's best to do that and if we have other probabilities that we need. So when we sell, we look for these red UFOs. UFOs are another app that we use. It depends on which platform you get it on as to how much it costs, but essentially what we're doing is we're looking for where there are, in this case, lots of sellers. That's why we look to the red UFOs. UFO stands for unfilled orders, but essentially we're looking for lots of sellers. Why? Because lots of sellers are likely to push the price down. So we want to know where they are. That's why we use an app to help us. Now there's one more thing that we look at here, and in this case, it's actually something that would invalidate this trade. We could just place our sell order up here, okay, and we could have our sell order there, and we could have a stop loss here, and then targets somewhere down here, whatever. However, it doesn't have all of the probabilities that we want. The reason for that is because we add in an extra probability, which comes from the bigger time frame again, and it comes from the EMA, the exponential moving average. Now again, you guys might have different tools that you use. You might use Fibonacci or Elliott waves or different forms of moving averages. That's fine. You might not use them at all. You might just use, if you use this technology, you might just use autoclimate and UFOs, or you might just use autoclimate and the EMA. You don't have to combine all of these things. That's what we do. We combine them to just add to the probabilities. So you'll see there that the EMA number is 0.9191, which is here. What we want is that this EMA number would coincide with our sell UFO. And in this case, it doesn't, which means we don't have as many probabilities as we would want it to have, because we don't have sellers and sellers in the context of a selling climate. That's what we look to do. When we sell, we want to sell where we have obvious sellers from the UFOs that coincide with the EMA, which is where lots of people would be selling in the context of a downwards climate. So we don't have that, so we move on to a new opportunity. If I'm going too quickly, if it doesn't make sense, you guys let me know. If I'm going too slowly and you already get all of this and you've been trading this way for a long time, let me know, and I can speed up or slow down as you guys need. I'm just looking in the chat box there, people saying hello and happy holidays. Hopefully you guys are having some good holiday time, and kudos to you for choosing to do something productive with your time between Christmas and New Year. I know most of us don't know what day it is during this period, so well done to you guys. Okay, so we're coming back to our scan, and we're going to look again on the daily climates. We're going to look for new opportunities. So here we have Canadian Swiss. It's a near sensible short. It's got that red box. So happy days. That's what we'll look at. Canadian Swiss. Okay, Canadian Swiss. And again, we've got a daily chart on the left-hand side, sorry. So that means we are putting a 55-minute chart on the right-hand side. But as I said, you can use a 60-minute chart if you want to. It won't make too much difference. So we have the same situation here, where yes, we have probability downwards. Yes, we have a UFO, but the EMA price is 0.7169, which is here. And it's not coinciding with the UFO, so no trade. What I'm going to do here is just to show you, if we put in 60 minutes, you see how it doesn't really change very much? You might sometimes, if you change time frames that are that close together, you might sometimes see different UFOs or different things going on, but a lot of the time it's pretty much the same kind of areas that would be highlighted, not too much. Faster would be good for you. Brilliant. Okay, Kevin, as you've said that, no one else has said anything. Let's go quicker. So New Zealand Swiss, we'll look at that one next. And by the way, Kevin and anyone else in the chat box as well, let me know if there's a particular market you want me to look at, particular timeframes you want me to look at, particular concept you want me to explain. By all means, let me know. Okay, so we have a trade here. There we go. That was quick. So we have thick red dot, probability down. We have UFOs here, or a UFO here, between 0.6250, rounding down to 0.6257. Now we probably are going to have to coincide both of these UFOs because they're very close together. So we'll use both of these UFOs together. But as you'll notice, the EMA is 0.6250, which is literally just where this UFO starts. So brilliant. That's what we're going to be doing. We will be using this chart and we will be placing this trade. Okay. Oops. There we go. We may even, just looking at the numbers, we may even have to use this UFO as well, but we'll do that when we get to it. So our entry price, we're just going to use that bottom UFO number, is 0.6250, which is great. That's exactly where that EMA is as well, isn't it? 0.6250. Our stop loss, we would use this top number here, which is 0.62668. We'll round that up to 0.6267. 67. We then add 7 pips in the case of us shorting. So that would become 6274. Now notice that by doing that, that's now fallen within this other UFO. So we're going to have to do it again, have a slightly bigger zone. So we'll take this top number, 0.6276, 6276, and add 7 pips. Don't need to round it up because it's already a round number. I'm going to add 7 pips, which takes us to 83. And that's just below this one. So that's going to be our area. Our target, final target, is going to be using this UFO down here on the bigger time frame. And that's going to be 0.61. So that's 421. We're going to round it up to 43, add a couple of pips. So 6145. And then our first target is always going to be 1 to 1 away. Oh, you don't hear sound anymore in these. Does anybody else hear sound or not hear sound? I guess if you can't hear me, that might not help. But if you can hear me, please let me know in the chat box that you can hear me. Sound is okay? Okay, so Nese, it might be something to do with, I don't know, whatever sound system or computer system. As always with technology, try turning it off and turning it back on again. It seems to always work for me. Connection was weak. Okay, cool. Glad you're back with us. Okay, so I'm going to use the control panel here. I'm going to click sell, and I'm just going to put this trade in. So it's 0.6250 is the entry. The stop loss is 0.6283. My risk, in all cases, I always put $50 for each of our targets. You guys put, of course, whatever you want to put, whatever you want to be risking. For me, I just do 50 and 50 because it's a nice round number. Could you discuss trade on dollar Canadian? Yes, I could. I'll get to that in a second, Nick. If you can let me know, whilst I finish explaining this one, if you let me know in the chat box, Nick, which time frames you want me to look at, and then we can go and be really specific on that example. Okay, so our entry and stop loss are in, our target is in, and we'll click sell. We also want to make sure we have what we call our safety target. We use this to keep us safe. That's why we call it that. We use it to keep us safe. It's always 1 to 1 away. And we do this because that way, if it goes a little bit in our favor, but not fully in our favor, we don't lose. That's why we put this in. So that's going to be our target 1 is 0.6217. And we've got our target 2 in. So just a quick summary, this was New Zealand, Swiss franc, daily on the left-hand side, 55 on the right-hand side. We went short using a bunch of UFOs close together with our target down by the bigger UFO. So daily and 4-hour, Nick, you're saying, okay, brilliant. So let's do US dollar Canadian. I'm using Oanda data, by the way. The reason I do that is because it's similar data to what we get on TradeStation. So that's why I use that. If you guys are using slightly different data, you'll of course get different results or slightly different UFOs, slightly different prices, but again, shouldn't be too different. Okay, so on a daily chart on the Canadian dollar, we have a thin dot on our auto climate. So we use auto climate, and again, there are so many different tools and pieces of technology, of course, we can use when we trade. I'm not saying auto climate is the be all and end all for everybody. It's just what we use in the way that we trade. So for us, if it's a thin dot on auto climate, what that means is there's not enough probabilities either way. If there are not enough probabilities either way, we do nothing. There's no point trading if we don't have clear probabilities in either case. So we would kind of be stopped at the first hurdle here for this particular set of timeframes. However, if we're using 4-hour on the right-hand side, we could legitimately use weekly on the left-hand side, and then we can see if we've got something that lines up here. Again, not always, but if we do find something that lines up, then great. Unfortunately, this doesn't line up. So here you see we've got a thick blue dot. So that would tell us probabilities up. We should look to buy. We do have UFOs. We have a bunch of them. But the EMA price is 0.2739, which is here-ish. So kind of in the middle of nowhere in terms of it's not with these UFOs and it's not with these UFOs. It's just kind of in the middle of nowhere. So unfortunately, no trade on the US Canadian using the 4-hour on the right-hand side. We could, have a look at Fibonacci time frame. We tend to use Fibonacci time frames, see if we've got any probabilities here. And in this case we do. In this case we do. So if we're using weekly on the left and a 144 on the right, which I know, Nick, I know you'd said daily and 4 hour, but of course we looked at that and now we've kind of manipulated the time frames a bit until we get an opportunity. We have an opportunity now, weekly on the left, 144 on the right. Now, just to be clear here, because I know some people might be thinking that time frames should be set together, that you should always use certain time frames with certain time frames. And that's a legitimate way of thinking. However, the way I think about it is this one on the left-hand side that's telling us where the probabilities are, that just needs to be bigger than the one on the right-hand side that allows us to be specific with our entries and exits. That's the purpose of these two timeframes. The one on the left is to give us guidance of whether or not we buy or sell. The one on the right is to help us buy or sell more specifically. So why does it need to be completely set? Now, saying that, you don't want to use weekly on the left and a 5-minute on the right. They're too far away from each other, less relevant to each other. So you want to make sure that the timeframes you use are relevant. So we use the daily and then a 4 hour. That was fine. They're relatively close enough to each other and they're still serving their purpose. Here we're using weekly and a 144, still serving their purpose. So as far as I'm concerned, it's fine to do that. Okay, so the EMA is 1.2739, which is within this UFO. What we'll do is we'll combine these two UFOs because they're close together. So even as price falls and that EMA falls, it's probably still likely to be within a UFO and therefore still a legitimate trade. So that's what we'll do here. So we're going long in this case. Our entry is going to be 1.27. See that says 517, this top sort of greenish number. I'm going to round that up to 52, then add a couple of pips. So 2754. Our stop loss, see that says that bottom green number 1.27057. So 1.27057. Round it down to 1.2705 and then take off 5 pips. You might think, why did we add 7 when we went short and why are we adding 5 when we go long? It's to do with the spread. That's why they're different depending on whether or not we're long or short. So let's put in the trade. So we had 1.2754 as our entry. Our stop loss is 1.27 even. Again, I'll put $50. You guys risk what you want. Our first target is always 1 to 1 away. So in this case, 54 pips. 54 pips of risk means 54 pips of reward in this case, which makes our target 1.2808. So we'll put that in. Then what we'll do is we'll make sure that we have our second target, which is up here, using this bigger UFO at 1.2928, and just rounding that down quickly. And again, you might ask, why are we not adding a couple of pips? We did that on the last one. Again, it's because in this case, we're going long. The last one we were going short, so the spread makes a difference there as to what we do. 1.2928. Okay, there we go. So now we've got 2 trades in so far. One of them using the daily on the left and the 55 on the right. One of them using the weekly on the left and the 144 on the right. I'm just going to actually make a note of that real quick. So it was placed on the 29th. Told you we forget what day of the week it is between Christmas and New Year. 1 week, 144. So Nick, I know you'd said dollar Canadian daily and 4 hour, but hopefully this helps you. We still found a trading opportunity on this time frame. Oh, sorry, on this market, even if we change time frame a little bit there. Okay, let's go back to TradeStation, back to our scan, see what else we could have to look at. So we've got the New Zealand Swiss. We've got a few actually to look at, so let's just go through these. So New Zealand Swiss, I think we might have looked at that one already. Let's have a quick look. Is that the one we already put a trade on? I think it is, isn't it? Yeah, it is, sorry. So we'll look at the next one down, which is pound Aussie. Ideally as well, guys, let's say, for example, we found a bunch of trades on the pound. You wouldn't want to double up too much. You don't want to be putting loads of trades on the pound, and then if something crazy happens, Boris Johnson says something silly, we might end up with loads of trades that go wrong or go right, but it's just doubling up on our risk and there's no need. So ideally, if you're placing multiple different trades, they would be on different markets. So with this one, we don't have a trade, and that's because thick blue dot, probability up. We do have our UFO, but the EMA is 1.8564, which is here, again, kind of in the middle of nowhere. Now, I'm going to use to my advantage what I explained just before, that it doesn't need to be that we use the exact same time frame every time. If we find that by moving about with timeframes, we find an opportunity, as long as it's still a good opportunity and we've not gone too far away. I've changed from a 55 to a 1 hour. It's 5 minutes difference, which in the context of longer term, sort of, mid-term swing trading is irrelevant, a 5 minute difference. We wouldn't want to go, oh, let's look at a daily chart all the way down to a 1 minute chart. Not in most ways that we want to be trading. In this case, by the way, just by changing that, we do have an opportunity. So let's put that on. So we have this UFO here, where the entry will be 1.8574. I'm going to round it up and add a couple of pips. The stop loss will be 1.8540. So we've just rounded that down by 5 pips. And you'll notice we expand this out. Our EMA from the bigger time frame is nicely snug within there. So happy days. Now we do not have, we do. Sorry, we do. I just needed to squidge it down a little bit. So our second target is going to be all the way up here, which, to be honest, is not very likely to hit. Getting a trade, if I show you how far away that is as a ratio, we'll do the maths. It's unlikely that we get trades that go that far. Again, that's why we have our safety target. So if I put this in, so 1.9868, that's a 38 to 1. Wouldn't we all love to have 38 to 1s all of the time? That would be great. But unfortunately, it doesn't quite work out that way most of the time. So we will have our far target just in case. If it does go that far, great, we want to capitalize on that. But what we don't want to do is be holding out for that to happen and miss any movement and not capitalize on any movement as it goes up. So what we'll do, we'll have our safety target, which we'll put in right now. So our safety target will be 1.8608. There you go, 1.8608. Great. And we'll put that in. But what we'll do, as price moves up, if we're right, let me squidge this right down so we can see it. If we're right and price comes in and starts to move away, hits our first target, and it's on its way up, okay? So it's here maybe, right? We might now be in profit of a few $100s or whatever, a few hundred pips. What do we then do in order to capitalize on that profit, knowing that the likelihood of it going all the way here is less likely to happen? What we do is, as new UFOs form, so I'm just going to pull this down to give myself some more space. So let's say goes in our favor and a new UFO forms. Price goes up from there. What we then do is we take our stop loss that was here and we put it underneath this UFO. Price makes a new UFO. Goes up. At this point, it's still here, right? It's still partly on its way. We take our stop loss from here and we put it here. So that would be one way to capitalize on the profit on its way up, knowing that we're unlikely to take it all the way. If we get it all the way, brilliant. If we don't, we might still take some profit on the way up. Of course, it could be that we're wrong. Oh, didn't mean to do that. And price just goes straight through. That's fine. That's why we use our stop loss anyway. So hopefully that makes sense. Okay, let's come back to TradeStation. So we just looked at the pound Aussie. Let's look at the euro. Oh no, can't look at the euro because we've got, that's hopeful there. We don't trade hopefully. That's not a good way of trading. Now we do have Canadian yen, which I believe is a new one that's just popped up. So let's have a look at that. Canadian yen. And perhaps what we'll do is we'll just cycle through a couple of very similar time frames till we find a good opportunity if we don't have one already. So let me just explain why this one on this time frame is just not a good opportunity, like literally just. I mean by the skin of our pips. We have a thick blue dot there, probability upwards. We do have UFOs here, and we have an EMA of 89.249, which is literally just within the bottom of this UFO. The problem with that is that EMA tracks price. So as price falls, so too will the EMA. So only by price falling a couple of pips, we would then be in a situation where things aren't lining up anymore. And we want to make sure that when we enter the trade is where we have the highest probability of things lining up. So unfortunately, it wouldn't work out on this time frame. Let's see if we go to a 55-minute, if that changes things. So notice that going to a 55-minute, again, slight differences, but not too much of a difference. Same numbers there. If we do a 144, see if something works out there. Wait for it to load. There we are. Okay, nothing there. So we've now looked through 3 time frames. There's nothing working that would coincide with our EMA. I'm not going to keep trying to force it. Again, you can look through different time frames, but for me, if you're going to be looking through 20 different time frames just to find an opportunity because you want it to be there, you're probably not trading in a very structured way. Okay, so let's come back, see if we've got new opportunities. We've looked at these. Okay. Now what we'll do is we'll drop down to a slightly smaller time frame, which is the 240, and we'll start there with the Aussie yen. So if we have 240, which is a 4-hour on the left-hand side, Aussie yen as well. And we might have a 21-minute on the right-hand side. Again, that could be 30-minute, it could be 15-minute. Doesn't need to be exactly 21 minutes, but as close to would be great. So first things first, we wouldn't be trading this in any situation, whatever the time frame on the right hand side, and that's because yes, we have probability up, but what's the only thing that stops probabilities of going up? Sellers, lots of them, and we've got lots of them right there. We've got a big UFO that starts 3 pips above where the EMA is right now. It's yeah, in fact, I think we're literally just within it. So yeah, we are within a bunch of sellers. So sellers are pushing down. We've got probability pushing up. We're at a stalemate. We don't want to be trading if we don't have room to take profit. If we want to be trading to the upside, we want room for it to keep going to the upside. At the moment, it's not got the room to do that because it's got lots of sellers in the way. So regardless of whatever we found, we wouldn't be trading it anyway. Okay, next one, Canadian yen, although that's not yellow box, so we won't look at that. Euro yen isn't, so in which case we have New Zealand yen. And again, you guys let me know if you have particular time frames or particular markets. Nick, I know you gave me a suggestion and I kind of just went and did something completely different, but hopefully that makes sense as to why. Okay, so this was a trade we put on last time that we would have cancelled, so let's get rid of that. So probability upwards. Now in this case, we actually have the opposite situation of what we just had, which is great because we have probability to the upside and lots of buyers underneath us and lots of room before we hit the sellers. So automatically, before we even look to the right and find an opportunity if there is one, we know we've got room to take this. We've got room for this to go up, which if we're buying, we want room for it to go up. I've just seen that on the chat box, Denise, trade for Euro Aussie. We'll go and have a look at that in a minute, play about with some time frames. I'm sure we'll find something. On an Aussie US dollar there from Kevin as well. Brilliant. We'll do Anissa's first. We'll do it in first come, first serve. I think we'll probably be able to find an opportunity with this one if we just move about time frames a little bit. Maybe not. Ooh. Just a pop up there that knocked me off kilter. Let's do 15 minutes. Okay, so here's, okay, brilliant. There we go. We have our EMA at 78.149, which is here, which is obviously where this UFO is. We've got loads of UFOs, one on top of the other. I'm going to use all of them, which for a smaller time frame trade is not too bad because it's only will only be 20 odd pips, maybe 30 pips of risk. So it's not too much, but we're going to have room to take it up here. So let's place this trade and then we'll go and look at those suggestions there. So we'll use all of these. And notice as well, that's interesting, all of these 4 mini UFOs fit within this bigger one here, which is great. Just lots and lots of buying going on at the same place, which gives us a lot more probability that it works out to our favor. So the entry will be 78.21. The stop loss will be 77.88. So again, it looks huge on the right hand side, doesn't it? But on the left hand side, comparatively to how far we can take it, it's pretty decent. Our target will be 78.98. So let's put this in. By the way, again, you don't have to take all of the UFOs. I personally like to, because I don't want to be stopped out in the middle of more buyers, if that makes sense. I'd rather just lump them all together and have more probability, but it doesn't always have to be that way, of course. All of these things are ultimately up to you guys to choose what you do, to choose how you manage yourself and how you trade. Again, if the way we demonstrate it makes sense, then cool. If it makes sense a little bit and you want to change some stuff, that's also cool. Just make sure whatever you do, back test it, prove it, demo trade it before you go risking money, and that will keep you safer. Okay, so that's our third or fourth trade I think that we've put on so far. These are on slightly smaller time frames, 4 hour on the left, 20 minute on the right, and we will now move on to look at the Euro Aussie. Anise, if you let me know with the Euro Aussie, if you have particular time frames that you want me to look at or particular things. I think this was an older trade. 1 hour. 1 hour on the left or 1 hour on the right? Sorry to left. Okay, cool. So an even smaller time frame. So if we've got 1 hour on the left, again, bearing in mind that the point of the left is to tell us whether we buy or sell, and the point of the right is to get us to be more specific. If we've got a 1 hour on the left, then we might want to have anything from a 15-minute down to a 5-minute, maybe 2-minute on the right hand side. So again, close enough to each other, not wildly different. So first things first with this one, unfortunately, on a 1 hour time frame on the Euro Aussie, yes, we have probability upwards. So that's a thick blue dot, probability up. However, we have those sellers in the way again. So we've got essentially buyers pushing up from the climate, sellers pushing down from the UFO at basically the same price right now. So we're at a stalemate. You'd have to, it would be more of a gamble, more of a guess to be trying to trade this, because one of those are going to win. The buyers or the sellers are going to win. And we have evidence in front of us that say they're fighting right now. If they're fighting right now, I don't want to get involved in that fight. I'd rather see who wins and then jump on that rather than, like I said, risk getting involved in the middle of that and not really having much probability as to who's going to win. What we could do though, again, is change timeframes. See if we have anything. We've had thin dots as I've changed it. Left day and right 1 hour, okay. Okay, so on the daily chart, it's probability down. On the right, we have a 1 hour. And yes, we would have a trade. We would have a trade. So let me just explain this real quick. Thick red dot, probability downwards. Oh, very good question, Kareem. I will get to that in a minute. That's a very good question. I might end on that actually. So we'll do this. We'll then look at Kevin's suggestion and then I will explain backtesting, hopefully all in the next 12 minutes. So thick red dot, probability down. We do have a bunch of UFOs on top of each other, but we have our EMA, which is 1.5696, which is just underneath this UFO. Now you might be saying, well, hold on. Let me just draw that again. It's not within the UFO, but as price moves up, bear in mind that EMA tracks price. As price moves up, so too will the EMA. So it's more likely to fall inside this UFO at the time that it enters. That's the most important thing. So we will place this trade here. So the entry will be 1.5703. I'm using, might be hard to see, but I'm using these two numbers here. Top number, so our stop loss will be 1.57, so it'll be 16 plus 7, so 2, 3. There we go. And our Wow. So see, our target would be all the way down here. So similar situation that we explained just before is that we would be trailing our stop more than likely as price goes in our favor, if it goes in our favor, because we don't want to be waiting for price to get all the way down here. It gets halfway and comes against us and stops us out. That would be ridiculous. So we want to make sure that we lock in profits on our way to this crazy crazy target, because that's again 30 to 1, which would be great, but just not very probable. So let's put this one in, and let's put our 1.5703, same stop loss, and our first target will be 20, so 1.5683. Oh, there we go. And that one will go in there. So that's our Euro Aussie trade. Now we'll look at the Aussie dollar there from Kevin. Kevin, let me know if, again, particular time frames you have, if you're a day trader, you might want smaller time frames. If you're a swing trader or position trader, you might want bigger ones. Let me know. If not, 4 hour, 1 hour, 4 hour on the left, 1 hour on the right. Okay, so here we have thick blue dot, probability upwards, happy days. We have an EMA of 0.7231, which is here. Unfortunately, that's not coinciding with our UFO, and I know it tracks price, but price would have to fall quite a bit before this fell down, but by then it would already have crossed itself. Does that make sense? Basically, the EMA is too far away from the UFO for them to line up if price moved. So what we can do is have a look maybe at 30 minutes on the right, see if we've got anything that would work out slightly better. Here we go. So again, notice I went from a 1 hour to a 30 minute. It's not like I went from a 1 hour to a 2 minute, right? So close enough to each other. So same situation. On the left-hand side, we've got our EMA at 0.72315, which is just within this UFO. That's great because if price falls and EMA comes down, it's still within the UFO. So we'll take this one. I would think we are likely to end up combining all of these, just because, again, based on how close they are to each other. Looks like a big trade, but again, based on how far we can take it relative to our targets, not so much. So 0.7329, that's the target. The entry will be 0.7234. The stop loss will be 0.7196. I've just taken 5 pips off the bottom of that one. Okay, so let's put this one in, and then Kareem, you had a very good question, so I will come back and answer that. Just as a caveat, I can't answer how to backtest in a few minutes. That's a much longer conversation, but I can show you where you can go to find out. Okay, so 0.7272. There we go. So that's going to be our target 1 and our target 2. Same stop loss, same entry, same stop loss, same risk, and our target will be 0.7329. Okay, so what I'm going to do, I'm going to go to a completely new one, something we haven't looked at yet, so I can show you about backtesting real quick, because we don't have a lot of time for me to explain it, but it's a very good question, and I think a lot of people should know about it. Just as a very quick concept, backtesting means taking the strategy that you want to be trading and looking back in time to see whether it has already worked, based on trading at times of day that you would be trading, based on risking the amount of money that you would be risking, based on applying the concepts that you want to apply, rather than somebody teaches you something and you go, yeah, great, I'll just do that on a live account, and then maybe it doesn't work at the time of day you're around, or it doesn't work with your risk tolerance, or you might want to tweak some things. Backtesting helps you to do that. Kareem, also a very good question there. I'll get to that in a second. So on TradingView, which I know we've been using this whole time, TradingView is really good for backtesting because you see this little double arrows pointing to the left-hand side. It's our replay button or our rewind button. You can click that, and then this little line will appear. you can then take this back to, let's say, for example, you wanted to backtest from the 1st of November. You would take it back to the 1st of November. I'm just going to point here for a sec. Oh, sorry, I keep knocking myself. There you go. Okay, I'm going to do that first. So 1st of November from down here, so you can see that there. So now that I've done that, I am looking at the market as if it was, let's just do that one more time, as if it was the 1st of November at 1 a.m. my time. Now, if you're not going to be trading at 1 a.m. your time, then you would just skip forward a few to see what it looked like at 9 a.m. your time, for example. So what you're doing here is you're saying, show me what I would have seen on that moment. You're essentially time traveling. I know that sounds like a weird and silly thing to say, but that's really what you do when you backtest, is you say, rather than trading from now into the future and seeing what happens, why don't I go back in time, trade as I would have traded 2 months ago, 2 years ago, 20 years ago, and fast forward it until now and see what would have happened, and get your data to prove your point based on something that's already happened rather than the unknown into the future. Now, a lot of people say, well, just because something has worked doesn't mean it will. True, but that's what we do everything on, right? In the world, that's what we base all of our decisions on, is what's already happened. So when we're trading, if you had been trading for 5 years, for example, and it had been working for you, would you suddenly be worried that it wouldn't work now? Probably not. So rather than trade from now 5 years into the future, why not go back 5 years into the past and do the same thing, but do it in a matter of hours or weeks to test 5 years worth of data rather than wait 5 years from now? So you basically would just click these little buttons, go back in time, see what you would have seen on both charts if you're using both time frames, seeing what you would have seen, and place your trades. And when I say place your trades, I mean draw them, because you of course can't place trades in the past. That would be amazing, but we can't. So you would just draw your trades one by one and log them as you would normally, but rather than wait for real time to pass, you just would click the next button and see the next candle appear. So that is a very, very quick example of what backtesting is. There are some sharpening sessions on YouTube that I've done about backtesting. Also have a backtesting course. I think it's $34, I think, on the Trade with UFOs website. So there are other places you can go to learn, but hopefully that gives you a nice summary, somewhere to start. And then the last question before we stop, and I know we've run over actually a couple of minutes perhaps. Okay, good. I'm glad that was helpful, Corinne. What is the UFO concept? So again, I'm going to explain it quickly because I don't have very long to explain it. And again, there would be other places you can go, for example, some sharpening sessions as well that we have on our YouTube channel that would explain this. But basically, the UFO stands for, I'll just switch this down. UFO stands for unfilled order. An order meaning a buy order or a sell order. When I click buy, I place a buy order. When I click sell, I place a sell order. So an unfilled order means a bunch of buyers that are waiting to buy or a bunch of sellers that are waiting to sell. That's what the concept is. And we therefore buy with lots of buyers or sell with lots of sellers. Why do we do that? Because the only thing that can make price go up is if you have more buyers than sellers. It's the only way that happens. The only way price went up from here is because you had more buyers here than you had sellers. The only way price can come down, for example, the only way price went down from here is because you had more sellers than buyers. That's it. It's really simple. I know there's many reasons why there could be buyers and sellers, but that's really the basics of it, right? So we use this app to say to us, there's lots of sellers here. Knowing that there's lots of sellers here gives us more probability that price moves down from there. Because if there's lots of sellers there, the likelihood is that there are lots of sellers, therefore more likely to outweigh the buyers, therefore push price down. If there are lots of buyers, chances are if price comes back to it, they're going to push price back up again. Because if there are lots of buyers, they're more likely to outweigh the sellers and push price up. Now notice I'm using language like more likely or more probable, not to say 100% definite. Of course not. Nothing in life is definite or guaranteed, and especially not the markets. That's why we don't just go, great, let's buy here and let's sell here, and just do that and just play that ping pong. You could, by the way, there's nothing necessarily wrong with that, but you're probably dealing with lower probabilities. If you have probability on the left-hand side that's going in your favor as well, you add to that, and then we manage our risk by putting our stop losses in to keep it even tighter. So that is a very quick explanation of what UFOs are as well. Hopefully that was helpful. We do these sessions. I'm not sure if there is going to be one in January now, but we do these sessions regularly on YouTube and on Forex Street. So yeah, join us on those. I know I probably rushed through those explanations, but if you look at a few of our sessions on YouTube, that would help as well. Brilliant. Thank you, everybody. Happy New Year. Thank you, Ray. It's nice to see everybody as well, and really nice to see you guys in the chat box, because I know sometimes when we log onto these things, we don't want to chat. We just want to sit back and watch. But you guys chatting has helped me to then go and look at certain things and look at different timeframes and hopefully give you a more valuable session. So so thank you for doing that. I know it can sometimes feel awkward, so thank you for getting involved. Hopefully you guys have a lovely New Year's. I was going to say don't drink too much, but that's the point. So do drink too much or don't. We'll do whatever you want. Have a great time. See you in the new year, hopefully for some great trading sessions moving forwards. And hope you guys had a good Christmas as well. Take care. See you soon.